Every passing day, 100, 200, 250 points gone in the index. So do you think much of the pain is behind us, or do you sense that this is just the beginning of the mayhem that we're likely to see in the next 1 year?
Hey, hi, good morning. I wish I could say that the pain is over, but I think we'll still see some bit of FI outflows kind of coming through. And I would say that I'm worried that at some point of time, the domestic liquidity support also kind of gets on a weaker footing, then the downside could be more meaningful from here on. If you look at India's valuation compared to the emerging market basket, we are still trading at a fair bit of premium. So I think these global headwinds also need to kind of ease a little bit the global yields, the oil prices. And now we have these whole domestic issues about the fiscal deficit, lower GST collections, and the entire reform agenda being put into question mark by some turn towards back to populism. So I think given all those things, at least in the short term, the outlook remains fairly hazy, I would say.
Calls up and says, Indrajit, oil marketing companies have got crunched. A good business at a great price, a bad business, a good business at a bad price, a great bad business at a great price, go for the price. Some of these stocks are now nearing the replacement cost. So is it a good time to buy some of these stocks? I mean, they may not give you a gratifying return in 3 months, 6 months, but the downside could be limited and restricted.
I think the stocks like oil marketing companies, which are completely dependent on what the whims and fancies of the government would be, I think it's still too early to kind of take any informed opinion on them. At least in the near term, these stocks could continue to correct more. Historically, they have gone and traded at close to even 0.7 time price to book. So it depends on what kind of metric you want to look at. If you look at on a PER basis, maybe these stocks are starting to approach their all-time lows. If you look at on a price to book basis, there's still some way to kind of go from here on. So given all those issues, and we don't know what happens if oil kind of continues to rise from here on, it goes to 90, whether the hit that they have to take is going to be limited to 1 rupee, or if government wants them to take more hit, then the valuations can continue to get crunched even from here on. So I think I would rather kind of stay on sidelines with the entire OMC basket right now.
Okay, but do you think that while OMCs are going to be at the receiving end of this fall, on the other hand, the explorers stand to gain, the refiners stand to gain, and maybe the bias of having a positive outlook on the sector would be on the upstream companies, really, so to speak?
Now, obviously, the next logical question is there going to be any kind of a sharing which has to be done by the upstream companies? Now, the concern in the market is that if that's the next logical step for it to happen, then even the valuation of the upstream companies will come into question mark. If I go by existing stated policy, these stocks look extremely attractive. ONGC looks very, very attractive right now. So, but again, the policy overhang is something that you have to deal with. So it's very unlikely that even these stocks will perform in the near term, given what has happened with the OMCs.
When you say that the FI selling is here to stay, what is the best way to judge that? You know, emerging markets have fallen 15 to 20% in local currency terms, perhaps more from the top. India was the last one to fall. So can I say that when the strongest market starts falling, that means we are nearing the end of the decline, or this is just the beginning for trouble for India, because India also has to align with other markets? You know, frankly, I am confused with my assessment, so I'll throw this curveball at you.
So I think at best what you can do is do a scenario analysis. So let's work with a potentially a bear case scenario on what I would call as a perfect storm. So let's kind of roll forward another 6 weeks from now. So mid of November, we would have known what exactly happens with this whole Iran sanctions. You have potential that oil remains here or maybe even moves up to closer to $90 or even higher. And post US midterm elections, if this entire rhetoric on the trade war starts to kind of recede, and we would be very close to our own state elections, and let's assume that the outcome which is likely to be out of that is not considered to be very favorable, then it's a perfect storm. We can fall significantly more from here on, because our premium over some of the other emerging markets will have to shrink significantly. As I said, we are trading at around 55 odd % premium over emerging market basket right now, while the historical premiums have been around 35%. Now, if you kind of reverse this scenario, that the oil prices kind of start to find a kind of a top and actually recede, because maybe the Iran sanctions are not as hurting as much as what they were thought to be, and this whole trade war thing continues or only kind of accentuates from here on, then India will be kind of able to hold on to its premium valuations, and a lot of domestic kind of focus stocks will kind of start looking very, very attractive. So I think it's more in the realm of scenario analysis rather than kind of trying to take a call, and I think the picture will get clearer over the next 4 to 6 weeks. But at least in the near term, our sense talking to a lot of FIIs is that though India remains an overweight stance for most of them, there is a likelihood of those overweight being trimmed in the near term, and which could lead to more outflows.